Now we'll discuss the Islamic assets backed securities. So before I go in detailed discussion, I will discuss the conventional asset-backed securitization. Under a conventional ABS, shortly called as investor return, comes from the income derived directly or indirectly from the cash flows of the asset being securitized, which sets it apart from non-ABS structures. Asset pools that underpin the securities can be made up of a variety of receivables, including common cash flows, credit card payments, auto loans, mortgages, and more. Assets such as aircraft leases and loyalty programs. They may include physical and non-physical assets, special purpose vehicles. Hard developed in terms of conventional asset-backed debt securitization. There are certain parties. One is originator, one is the specific purpose entity, and investors. Hard start is originator is going to sell to the SPV. SPV is going to sell it back to the originator in terms of is going to pay the money in terms of what he will give it to the special purpose entity. In that case, the original transfers the pool of asset to the issuer, and issuer is going to issue bonds to investors, the proceeds of which are used as consideration to purchase the pool of asset from the originator, and of course the pool of asset will flow to investor on the pro rata basis. In terms of requirement of a true sale, in terms of requirement of ABS, first requirement is the transfer of asset, whether it's a receivable or a tangible asset from originator to SPU, and it should be based on a true sale. When we say what is true sale is the underlying asset that must be isolated from its original owner. Then the originator must effectively transfer all rights. Originator must not hold any equity stakes. SPU must have no recourse to an originator for loss, and in case where an originator is also a service provider, services must be provided on an arm's length basis, so the asset can be exchanged on fair terms. What are the regulatory frameworks and requirements in addition to the sale concept? Asset to be transferred to the SPU must also meet certain criteria. One is the asset must generate cash flows. Originator must have a valid and enforceable interest in asset transaction. There is no impediments like contractual or otherwise to prevent the effective transfer of asset, and then the asset must be transferred to a fair value. No trust or third party's interest appears to exist in competition with an originator interest over the assets. Let's talk about Islamic asset-backed securitization. The key points in comparative with the conventional. The underlying nature of asset to be transferred or sold, which can be financial, tangible, or a hybrid of both. How the transfer is effected, and how the Islamic securities backed by those assets are structured to render them compliant and free tradable in the secondary market. So these 3 points are important in terms of Islamic ABS. Let's see in conventional asset-backed debt securitization how it moves. We have 3 parties, originator, and one is investor. In between we make a special purpose vehicle. The first step is the originator sells a pool of asset to the SPV. SPV gives the payment to the originators. Then the originator transfers his pool of asset to the issuer. Issuer start issuing bonds, and based on pro rata basis they are going to move ahead on that. In terms of Islamic asset-backed securities, it's the same almost with certain changes: originator and issuer and investors. Originator is going to sell and to issuer will pay purchase price of the assets that is transferred with asset to the pool, and then they will issue sukuk, and proceed of which will be used as the consideration to purchase the pool of the originator, and the pool of asset or his cash flow will flow to the investor on pro rata basis. In terms of sale of receivables, international like IABS created as a result of securitization of receivable from Islamic contract allow the receivables to be sold at discount, but this must be done on the spot. It should not be on the forward rates. And in terms of requirement of true sales, another important clause is the sale of the respective assets must be by way of a true sale. So what is true sale? That transfer the asset from originator to SPO is without any right to recourse the original in case asset fails to generate the expected income. How we create an acceptable IABS from the receivable, that is based on the securitization of tangible assets and a combination of both. These are all globally acceptable. How we process the issuing is sale and purchase agreement of assets. Then it goes to we have originator, we have special purposes, we have investors. So securities offered to investor based on the sale of tangible assets, that is financial asset, and tangible, that is have hybrid. It will go to the investor. Investor will settle, SVP will settle purchases price and against a subscription for the securities, and of course the asset will be transferred to originator's asset of SPV. This is the way the process of issuing IABS by using certain stakeholders, as I explained. Let's talk about now the lack of Sharia harmonization, the issue. They may impede the development of Islamic bonds and Islamic sukuk, especially when the issuance is to be traded across jurisdiction, and securitization of receivable as practice in one country may be in another country will be different. And of course lack of secondary market trading for Islamic security is a challenge, and there are a lot of issues related to it. Absence of standardization, lack of right mix of products require active role by governments in various countries depending on the size of investment, high volume trade. If we lack of market makers, these are all prevalent issues that we have to address in order to achieve the right mechanism of the IABS